Great. We're going to call to order the Hartford Subcommittee of the MARB for Thursday, May 7th. We have confirmed that we have a quorum, and we'll start with the first item in the agenda, which is the approval of the minutes from January 23rd, 2020. Is there a motion for approval of the minutes?
Mark Waxenberg, motion to approve.
Steve Felsigno, motion to approve.
Okay, Mr. Waxenberg has motion for has supported the motion, and who's going to second the motion, please?
Bob White will second.
Very good. It's been moved and seconded. Are there any edits or items for discussion pertaining to the minutes?
Yes, Madam Secretary, this is Christine Shaw. Good morning. I recall that this was a meeting where there was a presentation regarding the audit for both the city and the board. And while the results were that it was a clean audit opinion, I recall that there was a discussion about certain areas for improvement. And so I just want to make sure that those the continued work on those three outstanding items is not lost. So if there could be some reference in the minutes to the discussion around those areas of improvement that I recall from that meeting.
Very good. Ms. Kennison, do you want to comment?
Yes, I thought that the discussion is listed here, Christine, under the area where it says management letter comments. It's a management letter, and I see two of those items listed. I don't know if you recall anything else, but we do have them in here, and that's what I had recalled.
Okay. Yeah, I thought that there were 11 items, 8 of which had been remediated by the time we were meeting, but there was also the disaster recovery plan, and that stuck out.
Yes, you are right. It's 2 items, but under the IT item, there were 2 notions that were made in the report. So it's 2 comments of 1 IT item. That's where it's a little misleading.
Okay. Yeah, it doesn't need to get into too much detail other than, one of our responsibilities is to ensure that, these outstanding, things to do, issues to address, that they just stay on the front burner. That's all. So
totally agree, and I've added it to the agenda today.
Okay, great. Thank you.
Very good. Christine, are you satisfied with the minutes as currently reflected?
Yes, we're going to discuss, those additional items. Sure.
Excellent. Thank you. Any other discussion or edits to the meeting minutes for January 23rd? Great. Seeing none, Julian, if you could please do a vote by roll call, please.
Mr. Biller.
Approve.
Mr. Felsigno.
Approve.
Mr. White.
Approve.
Mr. Waxenberg.
Approve.
Ms. Shaw.
Approve.
And Secretary McCaw.
Abstain. Great. Okay, the minutes are approved. So our first more substantial item on the agenda is the review of the proposed fiscal year 2020 budget. This item is for review, discussion, and possible action. Mayor Bronin and the team submitted the recommended budget for fiscal 21 on April 27th. We'll recall that Hartford is a Tier 3 municipality under MARB review, and we are required to review their budget assumptions, including very specifically in statute and in our bylaws, the assumptions surrounding state revenue, property tax revenue, and the mill rates. Those are the specific requirements. We obviously look at all aspects of the budget. In your package today, you do have a brief memo addressing those particular aspects of the budget, and they're in your meeting materials along with a report to the MARB from the city. We will discuss in detail, but the City of Hartford is recommending a flat mill rate, and property taxes are based on the October 2019 grand list, as well as a tax collection rate where the formula is set by ordinance. The muni aid that is assumed from the state is consistent with the state budget, and that was essentially flat muni aid. And at this time, unless Julian, you have any other opening remarks, the city is going to provide us with an overview of their fiscal 2021 recommended budget.
I don't have anything to add other than the details you provided on the budget assumptions, and that we would be looking, if the committee is ready, to recommend approval of the assumptions to the full board when they meet.
Great. So over to you, Mayor.
Thanks very much, Secretary McCaw, and good morning to everybody. It's good to hear your voices, and sorry not to see you. But as Secretary just laid out, the high-level summary of the budget is that there is no increase in the mill rate. There is no long-term borrowing assumed. There is no reliance on one-time revenues, and there are no significant changes to service level, with the exception of a fairly significant reduction in anticipated capital expenditure from our general fund, as well as recognizing some of the efficiencies and savings that we've been working to achieve over the past few years, including in benefits lines and elsewhere. We reduced our revenue, as the Secretary mentioned, the collection percentage is set. It's actually by charter, I believe, not by ordinance, and is required to be the average of the last 3 years. And so while I will say that we do have concerns about the collection rate next year, and I think we're all well aware of the extraordinary uncertainty that we face right now, what we did was reduce our revenue expenditures in a number of other categories from where they were prior to the pandemic. So, for example, we've significantly reduced expected revenue from downtown North, from the parking authority. We've increased the assumption about tax appeals. That's actually on the expenditure side, but we have done a number of things to bring down revenue by $5.5 million from where we thought we'd be prior to pandemic. We've obviously reduced our expenditures accordingly, again, in those two main buckets of capital expenditure and recognizing some savings that we've been working to achieve, as well as a variety of other areas where we think we can responsibly reduce our estimates, such as outside legal counsel and a few others. So overall, this budget is 1% lower in expenditures than last year's budget. And it is largely a status quo budget from a service standpoint. Obviously, happy to go into as much detail as you like. As you know, we've been anticipating a modest surplus at the end of FY20. We still anticipate a surplus at the end of FY20. And consistent with our prior discussions, we expect some of that surplus to go into capital reserve, some of that to go into other long-term protections. But we are thinking potentially about establishing a COVID contingency fund that will provide an additional cushion beyond the reduction in revenue expenditures that we've assumed here. Secretary, I want to defer to you on sort of how much detail you want us to get into up front rather than just getting to your questions. So you tell me what would be most helpful.
Mayor, I would love for you or the team to definitely address the revenue assumptions, given that is one of the explicit requirements of the MARB. But we'll continue to follow your lead there. You're on the right track. I'd give a good detailed overview.
Okay, so I'm going to give a high level on you. So you feel free to supplement and jump in, please, on any of this. But on our revenue assumptions for taxes, the assumed tax revenue is down by $1.6 million from FY20. That's primarily because of the tax appeals that you are all well familiar with. That is not because of presumed collection challenges in the coming year. On the licensing and permitting category, although the revenue is actually up slightly from 2020, it is down from our pre-pandemic estimates. There's a significant amount of development planned and still expected from downtown north to the hospital location to Park and Main. And so there are a number of areas where we are anticipating license and permit revenue above normal. So again, while it is up from last year, it's down from where we expect it to be. Interest and rental income is down by $1.5 million, and that is because of the interest rate environment and market environment. The other financing sources are the other big category where there's a reduction of $1.6 million, and that is as a result of those reductions that I mentioned from Parking Authority and Downtown North primarily. Now, again, one of the things that I've highlighted in my budget letter and presentation is that we are not saying that $5.5 million represents our confident estimate of how much we're going to lose. I think the more honest way to describe it is, we felt it was important to reduce revenue and do our best. I think this probably reflects the minimum reduction that we should anticipate, but there is so much uncertainty, both in what the effect of coronavirus on tax collections will be, what the effect on state aid will be, and whether or not there will be any federal, state, and local aid forthcoming in the weeks ahead, that we did not feel it was appropriate to cut into muscle and bone beyond the very deep cuts we've made over the last few years and sort of preemptively damage our ability to deliver basic services, which again we feel we're already delivering in some ways inadequately and with very lean staffing. So that is the logic of our proposal, but with the recognition that, like every community around the state, if what we experience in this coming year is dramatically more painful, then we will have dramatically more painful choices to make.
Mm-hmm. Very good. When we pause on revenues and open it up for discussion, I'll start with a couple of questions. What is happening in terms of the formula for the residential assessment ratio? Just curious, based on that formula, is it staying flat? Is it slightly increasing?
It really doesn't move this year.
Very good. And are we at the point, I recall we were weaning ourselves off of some of those tax lien sales. What are we assuming here for the subs? Or have we fully met that contractual commitment?
Yulita, can you speak to that?
Yep. So tax lien sales, we're assuming $480,000 in FY21.
Okay.
And you're just slowly... for context, as you'll remember, Secretary, that's down from about $4 million a few years ago.
Yes. Mm-hmm.
Yeah. So FY20, 2019 actual came 740 with the adopted 750, and now we are assuming we're in the recommended budget is 480.
Very good. And Yulita, are we approaching in 22 or 23 where you think those that sub-commitment will have been met?
Leanne, could you speak to that? I'm not positive on the tax lien sales.
Sure. Good morning, everyone. This is Lien Sales, Director of Finance. As of right now, we know that the amount of subs that sell every year decreased around $200,000 or so. I'm not sure when we should expire that completely out. We have to do a thorough review of the contracts to determine when those sales would end.
Very good. Thank you, Leanne.
Welcome.
So as Leanne said, in my forecast for the 5 years, I do assume 480 upcoming years.
Got it. And from an appeals perspective, have we resolved most of the appeals that were under review? I know there are a number that were going through the court process. Just want to get a sense of, is the exposure more limited in fiscal year 21 for outstanding appeals that could impact your current year tax levy numbers?
So in the assumptions for recommended budget, we left our tax appeals at the 3 million level. However, outstanding tax appeal number hasn't changed since we reported in December, just because the COVID came through and there was a postpone on the court appeals.
Okay.
So we have the same outstanding court appeals as of now. The number actual assumptions is lower. However, we don't know what's going to actually happen at this point. So we would be conservatively at 3 million.
Got
To
it.
put another way, Yulita, remind me, but I think that we had anticipated, and even this we believe to be a conservative estimate, meaning erring on the side of a negative variance, that of around $2 million in further tax appeal exposure. We bumped that up to $3 million.
Very good. And two last questions for me, Mayor. With respect to the corporate contribution of $10 million, do we believe that we still have that commitment on a go-forward basis? And is it for general capital, or is it going to be more restricted in use in terms of what those corporate partners want to see those funds used on?
We do believe that it remains in place and reliable so long as we remain consistent with our plan, and I think that has a lot to do with with the work that we're doing together here. But I do believe that commitment's in place, and it is a replacement for general fund revenue. 6.6 million of it goes directly to the library, but that is a direct replacement of general fund contribution, and the remainder comes via the Hartford Foundation directly to the city.
Okay. And the last one I have is just with respect to the MIRA 1.5 million. Do we expect that to come in fiscal 20? And where do we kind of stand with that agreement for fiscal 21? We feel like that's firm?
We do expect it to come in fiscal 20. We have the signed agreement. Actually, Yulita, Leanne, have they already made that payment?
I haven't seen anything coming through, but they did sign the agreement.
Yeah, and then confirmed at the last, we have recent confirmation from their counsel on finance that it is coming in fiscal 20. We still assume that in the years ahead. I believe that is a sound assumption. However, as you well know, MIRA is an operation in crisis in many ways. Yeah. But I believe that so long as they continue to operate, that will be there. But there's not a legal guarantee.
Okay, very good. Other questions and discussion on the revenue assumptions for Hartford's fiscal 21 budget?
Bob White, Mayor, thanks for your candor in the budget process. I think having something realistic helps. What if the collection rate goes down by a point more than your estimate, which is a fixed formula? Ballpark, what is that?
Well, Leanne, correct me wrong, but I mean 1% of collection is about 2.8 million. So we've reduced, although the reduction is 1% of total combined city and Board of Ed budget, it's closer to 2% of tax collection. And if you saw another percent deterioration, it would be, 2.5 to 2.8 million dollars. And as you know, I mean, we are very, very eager to avoid drawing on our on our fund balance, which we've been building, but we do carry a fund balance now of 9 million, and we believe that we'll be able to add to that fund balance, whether assigned to a COVID contingency fund or unassigned, that could provide some additional protection.
Second question, I don't know if this is for the 5-year plan or now, but what is the process for the reval, which is as of October 1, 2021? Yeah. My understanding is that is, having done some tax appeals, that is the valuation date, but that a lot of preparation starts obviously a lot earlier. And, given the uncertainty, do you have any concerns about the process or any adjustments to how that's done?
Yes. we've anticipated that, we would be starting that process very soon. We've actually already pre-funded and budgeted for the expense of that process. But I suspect that there will be a statewide conversation, or at least a conversation among many communities about whether to delay reval, in light of the extraordinary circumstances we're all living through.
Cool. Thank you.
To Mayor's point, there are a lot of municipalities that have been reaching out for, obviously there's existing statutory authority to request the delay, but obviously looking for a more flexible process in light of the COVID impact and the impact on values and net income, things of that nature. So that conversation is ongoing. Any other questions on the revenue assumptions for fiscal 21? I think the revenue assumptions look very sound, and you've made appropriate adjustments where you know that there would be COVID-related impact. I'm glad to see that the corporates are continuing the $10 million contribution, and you feel optimistic about the MARA, the tax assumptions, and your methodology here looks really sound as well. And the question I had was for last one for revenues was for Leanne. And Leanne, I'm just curious if you recall in 2008, 2009, when we had our last economic downturn, do you recall what the pre-economic downturn tax collection rate was as compared to maybe like 2008 or 2009? Just want to get a sense of how material of a change you saw from a tax collection perspective.
Sorry, Melissa. At this point in time, I do not know what the tax collection rate was for 2008, but I can double check on that for you and get back to you on that.
Very good.
Melissa, I do. Melissa.
Sure. Yes.
2008, the property tax collection data that we have for 2008 was 96.3%. However, during that year, the grand list had a large dip.
Okay. Got it. And Kim, can you tell what it looked like before 2008? Do you have that data?
Yeah, actually 2007 was 95.5%. So then it actually rose, which seems a little weird, but the grand list dipped from 3.5 billion to 3.3 billion. And then in 2009, it went back up to 3.4.
Got it. Okay.
So the collection rate looked as if it grew, but the impact was in the grand list.
Very good. That's pretty
and it
interesting.
looks like they had some intergovernmental subsidies during that time, but I don't know the details. I'm looking at it at a high level.
Okay. All right. All right. Anything else on revenue? Great. So just turning to the expense side of the budget, Mayor Litta, do you have anything that you want to particularly flag? Of course, we're interested in what you have built in for contingency, obviously, but I'll turn it over to you to talk us through some of the highlights.
Sure. So again, as mentioned before, it's pretty much a status quo budget. There are, I'll highlight a couple of things. The payroll increase is about 1.3%. So total payroll is 111.8 million versus 110.3. That's primarily because of positions shifting from grants to general fund, particularly COPS grants and SAFER grants, as they continue to shift. There are some step increases that are also there, but almost all of our unions are still operating under zero, wage increase contracts. Benefits down slightly, just consistent with experience. Debt and other capital expenditure is down again because that's where we take where we achieve some of the savings in this budget to account for the drop in revenue. And the other on utilities, we're up about 425,000, and that is primarily driven by MDC and MIRA fees. There's a decrease in fuel costs and obviously lots of other offsetting costs. We have some other fuel energy efficiency measures that have saved some money, but overall it's a net increase of about 425,000 or 1.6%. And on the other non-personnel, which reflects the anticipated expenses for outside counsel and some vehicle and expense lines, and contingency, it's down by $2.5 million. And Yulita, correct me if I'm wrong, our contingency in here is at 3, right?
It's 2.7.
2.7, thanks.
Excellent. Couple of questions. On the health line item, I see that we're still projecting in fiscal 20 health actuals of 35.1 million, and then next year we're projecting or proposing a budget of 34.6 million. Is that because health is trending favorable in fiscal 20 and you perhaps just haven't yet reflected that in your projection? Yulita,
Yeah.
I see the actuals did come in low. Okay, great. But we have built in appropriate medical inflation in that 34.6, right?
That is correct.
We believe, yeah.
Okay. And then it looks like on the mitigation line, you just captured that your attrition has been coming in a little bit higher. You bumped that up to $1 million.
That is correct, yes.
Okay. And then
then
very good. And then with
The
respect
other place
to
I'm sorry, Secretary McCall, the other place where we come down a little bit is on payouts budget.
Mhm.
We've reduced that a little bit.
Very good. And it seems to align with your experience. And then with respect to the MRF, does the 43.6 reflect the latest number from Hooker and Holcomb? And just remind me, what is the long-term investment rate of return that we assume for MRF currently?
The rate of return is 7.25 now.
7.25. Okay.
And it does reflect the latest report that we received in March and was approved beginning on April.
Okay, excellent. All right, opening up for questions on the expense side.
This is Mark. In going through the actual budget, I noticed that you mentioned that there's positions that are being moved from grants to the general fund. Are in your budget, are you budgeting for positions? And which I assume you're doing, and you are also budgeting, I assume, for the health benefits for those positions. The question is, of those positions, how many are vacant right now? Or are those budgeted for actual bodies that exist today?
Thanks, Mark. It was a little tough to hear you, but I think I got the question. So apologize if I don't get all of it. But the main areas where we have two bigger areas where we have shifts from grant to general fund, and then one smaller. The smaller is our sustainability team. We have a sustainability director and then another sustainability team member who have been grant funded, and those are shifting over to general fund. But we have derived some significant savings from their work, particularly on energy efficiency. And so we believe that those positions more than pay for themselves. But yes, those positions are fully factored in as general fund positions, both salary and fringe. One of the bigger categories is on fire, where we got a very significant SAFER grant, support the hiring of a lot of firefighters a few years ago, and that steps down in terms of the percentage of salary that it covers. So we have been each year shifting greater percentage over, and yes, that again counts for both salary and fringe. On the police side, we have a COPS grants that are again reducing and rolling off, although we're going to be going after new COPS grant funding this year. We'll see how it goes, but we're going to be going after it. What we've done, we have sort of tried to align our. It's the best way to explain this. We have been carrying, as you know, a number of police vacancies for a while because we've been targeting the staffing number of 473. That's kind of been our target for where we want to get to after we fell way low where we should be. And we're already, when I came in, we began rebuilding and we dipped as low as 375. Our target has been 473, which is what we've budgeted for. We actually had been budgeting, though, for all of that 473 in general fund, and then we had grant positions on top of that, part of which was helping with our attrition. What we've done in this budget is set what we think is both a more realistic and more appropriate number of 458 general fund positions with the goal of achieving 15 additional positions from grant funding, so that combined grant and general fund, we'd have our target number. In the meantime, we're fully comfortable with a position count of 458. We're at 430 right now. We're going to be recruiting to get that number. We'll probably still have some vacancies this year.
Okay, thank you.
Mayor, how are we doing it with budgeted headcount in fire versus filled positions?
We are, I believe we're six down. Is that right? Yulita or Lien? Yulita?
I will look it up right now. I'll let you know. I have a backup.
We're pretty close to fully staffed.
Very good. Okay. Any other questions?
We do assume hiring to fill the remaining handful of vacancies.
Very good. Okay. In terms of overall vacancies that the city is currently carrying compared to what's in the fiscal 21 budget, do you have a sense of that, Yulita? Maybe just as a follow-up.
Yes, I can get back to you on this. How many?
Sure. Okay. Other questions on the expense side of the budget for Hartford? I have one.
Bob White.
Go ahead, Bob.
Bob White. Are there any collective bargaining agreements that come up for negotiation in this fiscal year?
Yes, fire.
Okay, and that would, so that may impact, would that impact FY21 or later years?
Depends on what happens.
Does it expire on June 30th, 2020?
It does, yeah.
Okay, got it. Have you, do we include any assumptions or wage reserve depending on the outcome of those negotiations, or do you kind of account for that through the contingency line item?
We're accounting for that through the contingency. I think for a variety of reasons. I just think, yeah.
Very good. Bob, I don't know if you were still continuing.
No, I'm through. Thank you.
Okay. My last question, I just wanted to get a feel from you, Mayor, with respect to the PAYGO CapEx. Can you just give us a brief update on how you're doing from a PAYGO CapEx perspective? I see that we obviously adjusted downward the $6.8 million for fiscal 2021, but if you can just give us a little context on these numbers and how much you think you will be able to continue to move forward on for capital projects in fiscal 2021.
So our total capital expenditure budget in FY21 is $30 million. And that's because our sources of funding are multiple. We've got the general fund contribution of 6.5 here. We also have some pre-funded accounts that we've been funding through our capital reserve in prior years in partnership with you. And then we have some state grant reimbursements and other grants that account for the remainder. So our total capital expenditures, it's more lean, it's more modest than we'd like to do. We think that we could and should be investing more, but our total capital expenditures is budgeted at $30 million this year with 6.5 of the general fund. This has always been a point of concern for all of us. We're trying to go as long as we possibly can with pay-as-you-go general fund funding of capital. I think that how many years we'll be able to do that will depend on a lot of things that are unknown to us right now.
Thank you. Any other discussion? Great.
This is Mark again, Melissa. Just a couple things. In the actual budget on the board side, a couple quick questions. You listed in-kind services for about $3 million. Is that a new? As I looked at it, 31-1. Obviously the board hasn't adopted its budget yet. It's not reflected here, but just the general look from your side. A couple questions. What are the in-kind services that you are now will be providing for that $3.1 million in the budget? That I assume they're new because the way I read it, there was no in-kind services budgeted this year, or are they just a continuation of in-kind services to the board? And secondly, what communication from the board to you or to the town side, do they expect to have for a surplus this year? And are you going to, like you did last year, designate that as a give back, or are you going to put that into your quote unquote COVID contingency? What are the plans for any Board of Education surplus that one would assume would be occurring this year?
So we don't, on the last point, we don't really know yet with confidence what the board is going to end up with this year. It may depend to a large extent on end of year health claims experience. I think we're all kind of waiting to see whether there is depending on the scale of reopening, whether there's a spike in health claims in the now or in the first couple of months of the year that gets attributed back to fiscal 20. So we don't really know where they're going to end up. If they do have a surplus, my intention right now is to dedicate it back to them again.
Okay.
Mr. Mayor, this is Clarence from the Board of Ed. May I speak?
Oh, sorry, I didn't know you were on, Clarence. Yes, please.
Yes, you may.
To your point, we think we may have a surplus, sir, but it's all related to our health care, and we would ask that we give it back to the city to come back to us because we expect with the COVID outbreak, people haven't been able to go to the doctor, so we're afraid that come July, August, when hopefully they can get back to the doctor, there's going to be a surge of claims. So any surplus we have, we'd hope to give to the city and have it come back to us to cover those claims we expect to come later on in this calendar year and next fiscal year.
Okay, thank you.
Thank you.
Any additional discussion on the expenditure side of the budget?
Oh, and to your question, Mark, on the in-kind, Yolitza, Leanne, Clarence, Cleric, I think that's just a continuation of ongoing in-kind, and that includes payroll processing, legal, crossing guards, and a number of other things.
Oh, okay,
that is
great.
Last year we had 3.0, and this year 3.2.
Okay, thank you.
Great. And on the MDC line item, is this the latest and greatest from the MDC on that increase to 13.3?
Yep.
Okay. All right. Well, I think that we have confirmed that the property tax collection assumptions are sound. You've adjusted for the impact of the appeals. It's a flat mill rate. It reflects very modest growth. It looks like all of the revenues that potentially have been impacted by COVID have been adjusted. Certainly the interest rate assumptions on cash have been reduced. Obviously licenses and permits will continue to monitor, but you have some thoughts on a COVID-related restricted fund balance contingency. You have assumed flat municipal aid, which is an appropriate assumption, and adjusted parking revenues as well as dono-related items. In terms of the MARB's responsibility on reviewing revenues, it seems that what you've put forth has satisfied those requirements, and you've made, I think, sound adjustments on the expenditure side of the life that is supported by your current projections and seems to meet your service delivery levels as well in terms of where they're currently at. I would like to see a CAP plan at some point. I know the city's working on that, and obviously in the context of a longer term 5-year discussion, that would be very helpful. But absent any further comments from the MARB subcommittee, I think we have a budget that could be ready for action today. Was there someone who wanted to pop in and say something? Okay. So with that, go ahead.
Sorry, Secretary McCall, I just want to let you know there is in our budget book on what we submitted to council, there is we are prepared to go over a 5-year capital plan with you. The biggest concern I would flag is school construction, and we've had that conversation before, but we do have a 5-year plan built out.
Great, that's the next item on our agenda. We're looking forward to it.
Oh, good.
Perfect. All right. Okay, so why don't we go ahead and have entertain a motion for the approval of the proposed fiscal year 2021 budget, including the revenue assumptions. Is there a motion?
Bob White, so moved.
David
And a
Miller, second.
Excellent. It's been moved and seconded. Is there any discussion? Great. Seeing none, we will vote yes or no. Julian, over to you.
Mr. Biller,
Yes, approved.
Mr. Felsigno,
Yes.
Mr. White,
Yes.
Mr. Waxenberg,
Yes.
Ms. Shaw,
Yes, and I did want to make a comment during the discussion, but just quickly, I wanted to commend the mayor and his team for advancing this budget, which is very thoughtful in terms of what is known, and the acknowledgments, the candor that's been noted is appreciated. So, yeah, approved.
and Secretary McCaw.
Yes. Great. Okay. So we will put the proposed fiscal 21 budget on the next full MARB agenda. And I want to echo Christine's remarks. This is a solid budget plan. And thank you, Mayor, and your outstanding team. The next item that we have is the review and discussion of the fiscal 2021 to 25 5-year forecast. I just want to give a heads up that at around 11 o'clock, I'm going to turn it over to Kim Kennison so that I can join another meeting. But we will start with a review of the 5-year plan. Julian, do you want to give a couple of the highlights, and then the mayor can give an overview for us?
Sure. So the existing contract for financial assistance between the city and the state requires that the city annually update its multi-year financial forecast. And an updated forecast is routinely included in the budget document at a very high level, but with a very thorough explanation of the assumptions. And then as a supplementary document, the city provided a more detailed projection that includes the revenue and expenditures in more detail. That was included in your packets, and it with the title "The 5-Year Outlook to the MARB." And so this document, or these projections, essentially update the rolling multi-year forecast that the city has been working off of since the adoption of the original recovery plan. I think I prepared a very brief summary of the assumptions from one plan to the next, which I distributed earlier this morning. And just to provide a quick sense of how the assumptions have evolved over the few years that the city has been working off of the plan. And I think that one of the takeaways would be that the main driver, or the assumption that's having the biggest impact in terms of it changing over time is the projections of the grand list growth. And so where there are other changes in the forecast, it appears to be driven primarily by what's happening with the grand list. And so whereas actual grand list growth is not quite as substantial as was included in the original projections, the city is having to absorb that lost revenue on the expenditure side. I think the capital contributions are probably less than what the city would have otherwise preferred as a result. And we're also seeing the impact in terms of the required need for revenue and expenditure enhancements that are shown in the out years to balance the budget. And there's a very simple table in the handout that compares the required efficiencies and mitigation efforts that were depicted in the previous update to the current update. I think the other areas where the assumptions have changed have really been a function of updating those assumptions, making tweaks to them based on prior year actual revenues and expenditures, but not really a significant shift in terms of the approach or the thinking behind them.
Okay, excellent. So Mayor Bronin, do you want to start with the revenue assumptions of the 5-year plan?
Sure, and forgive me, I'm having some technical difficulties, so I don't have the presentation in front of me, but I think Julian hit all of the highlights. The one thing I would say is, with apologies, there is something missing from this projection, which is an assumption on general wage increases over the 5-year period. We had been anticipating a 1.5% increase, and that is not built into this plan. So that obviously escalates as those new contracts come open. And so the deficits and efficiencies that need to be found are greater than is reflected in the stable, roughly $4.5 million line that you're seeing there. So I just want to flag that, and we'll fix that in future presentations. But I just want to flag that for you. But I think Julian's exactly right about the revenue. The big, obviously, there are two main drivers for us. One is grand list growth, and the other is state municipal funding. And a lot of the changes here have to do with changes in the assumptions about grand list growth, but it assumes flat state funding, which we certainly hope for.
You and me both. So can you remind me, the next reval is going to be as of, is it October 1, 2021, and it affects the fiscal 2023 budget? Can you just refresh me?
Correct.
Okay.
Correct.
Got it.
If we proceed on schedule.
Okay. And what do we assume for the grand list growth assumption in fiscal 22 and then in fiscal 23?
Yulita, can you speak to that?
Sure. So in FY 2022, we're assuming a 0.69% annual growth, which is mirrors the FY 2021 recommended budget assumptions. And the same assumptions. In FY 2023, 3.5, that's where we planning to have a reval, and following here, 1.5% growth.
Okay. Got it. And Yulita, can you just remind me, or you can send afterwards, just some of the historical grand list growth, maybe like the last two revals? I just can't remember off the top of my head to get a sense of what that growth looked like. I think I've erased some things from my memory bank. Go ahead.
Yes, I do have that information. I can send it to you.
Okay. Very good. So you've based your projection out, your forecast on your fiscal 21 recommended. I see a little bit of growth in licenses and permits.
Yes, just a little bit with the construction going on, and speaking with the license and inspections department, they proceed to see this growth.
Very good. But essentially, the majority of the other line items are relatively flat. Then what's happening in other financing sources?
So in other financing sources, we assume the $10 million corporate contribution and the same level of Hartford Parking Authority and donor.
Just keeping in mind that corporate contribution lasts through fiscal 24.
Got it. Okay.
Yeah. So it's basically flat going from 2022 to 2025.
Very good. And then on the expenditure side of the house here, we haven't built in any of the potential salary increases that could get negotiated. And it's pretty standard assumptions on benefits, standard medical inflation growth, et cetera. Yulita, do you want to just touch upon a couple of the major areas?
Yes, that is correct. The health assumptions are forecasted 7% annual escalation. from 22 to 25. Pension is based on the report that was provided to us last year. We're going to get that 5-year outlook sometime in May. It doesn't come that early. And debt services is based
Let me ask one quick question on the MRF. Do we have any other assumptions on modifications to the rate of return that were baked into those out years? Or is it assumed that we stay at I think it was a 7.25 that Mayor mentioned?
Yes, we assume that. That's what was reported the last year on the last year report.
Okay. And I would just flag for the team that as you're thinking about a set aside for COVID recovery, we will also want to think about the inability to meet the 7.25. You might want to model out some scenarios and get a sense of what the impact on the ADEC could be, just for your back pocket.
Yeah, that's obviously a point of great concern right now.
Yes. Okay. I'll tell you what, sorry. I see that you have. Go ahead.
Yeah, so that pay as you go assumptions for FY 2022 8.3, and then for FY 2023 through 2025 it's 10.4. Utilities has a little bit increase as NBC. That's a big impact we perceive to happen, and other category has just those small increases throughout the years.
Mm-hmm. And Yoletta, on fiscal 22, the $938,000 for wages, is that just a wage reserve for potential contracts?
This is just the payroll increase of the steps that we calculate. So it has the step increase.
Okay, very good. All right, I'm going to open it up for discussion. I will make a couple of remarks and then I'll leave it with this team. So it's clear that the 5-year plan that we have in front of us is one that shows that even with the 3.5% grand list growth in the next reval, there's still a $4.8 million shortfall. We have not baked in any wage increases, and it obviously it might be helpful that the city will be negotiating at a time where we're having a short-term economic downturn. But I think we all have to recognize that the union contracts that Hartford negotiated are probably some of the most aggressive contracts that we've seen in the state at a municipal level, and it will be difficult to mirror, 2 to 3 years of zeros coming out of the past 4 years. So certainly there's some exposure there, and I think it's appropriate that you weren't assuming a 1.5% increase, but obviously the $5 million structural shortfall is larger if we think realistically about what you might have to offer to your employees. The plan as is, though, quite frankly, is not a plan unless it shows some measure of what we would do in these years to close out the $4.8 million gaps. So I will just say that I think the MARB would have a hard time approving it in its current format unless we begin to think about maybe some scenario planning of what it would take to close the 4.8. I think that the state recognizes, and I certainly recognize, that municipalities can't live on flat muni aid indefinitely, and so I would like to hope that that changes in the future. Obviously, we're in tough financial times, and one of the best things I can do to protect municipalities is to hopefully not have a muni aid cut. But I would expect that in this 4-year horizon, there'd be some increase in muni aid, but a plan that is showing there's still a $5 million hole, it's not one that MARB can take action on. And I believe the city has to do some scenario planning on mitigation and what that would look like, so that there's a plan that shows those options. We would be very inconsistent with other municipalities if we were to let this go out of subcommittee in the current format. So as far as the baseline plan and the forecasting of revenues and expenses, that all comes across to me to be very well done. But it seems that there's a more robust conversation about the what if the assumptions here are accurate and you really had to close a $4.8 million gap. So I'm going to stop there and open it up for anyone else to make remarks or questions.
It's Mark. It appears that the biggest drivers that the mayor has, that we've known all along, is the reval. And the grand list growth, or lack thereof, which is impacting the 5-year plan, and the assumed 1.5 now down to 0.69, even with the stabilized no growth in state funding. So the mitigation efforts to close the gaps, as the Secretary has stated, that I've noted or I've seen in the handouts, appear to be worthwhile to continue to explore, as well as other potential contingency plans that may be in the offing based on the impact and my concern of the ADEC. It's clear that the 7.25 won't be met probably. So the impact of the grand list, which you know is at 0.69, and you budgeted it accordingly for the 5-year. But now on top of that, flat funding from the state, and on top of that, the very real possibility of the ADEC increasing due to the 7.25 goal of not being met over the next couple of years until and hopefully there is a bounce back, is cause for concern about the gap even getting greater. And I do have concerns, as the Secretary mentioned, that the unions that you are now negotiating with and will negotiate in the future should not be expected to absorb those deficiencies. They've done that for the past 3 or 4 years or the past 1 or 2 contracts. So it's a tough road to hoe, but something that one has to consider in the long term of how do we move forward in these short-term difficult times, and what contingency plans are we going to create in order to create a fair wage for those moving forward and supply the services necessary for our constituents. It's a tough road, but one that I think MARB is going to have to address with the city to have it move forward.
This is Bob White. I echo what the Secretary and Mark have said. I don't know if where this comes in the agenda, but I noticed 2 items regarding, or an item regarding revenue and expenditure efficiencies or growth. Maybe that's the time to talk about it, but it seems that is at least the beginning of the kind of conversation that I think we obviously need, especially if the reval is postponed, which may make some sense, but it would create a huge hole, it seems to me, in FY23. So again, I don't think now is the time to sort of scull that through, but I look forward to the discussion on the revenue and expenditure initiatives.
Okay, this is Kim Kennison. I just wanted to make everybody aware that the Secretary had to get off the call to get onto another call. So as we move forward, I'll be the one wrapping the rest of this meeting up for us. Does anybody else have any other questions concerning the 5-year plan that you would like to speak with the mayor on? Okay, you are right, Mr. White, on talking about initiatives. One of the things that the Secretary did want me to convey is that for the MARB, it would be important that we do have at least a soft plan to comb out some of these items that to fill in the gaps and give us some other scenarios as we move forward to the MARB. And then secondly, again, having some contingency to mitigate some of those risks that are out there and deficiencies. And I would ask myself that we do have a write-up that Julian provided, but I would prefer to see the assumptions included in your 5-year plan from the city rather than refer to Julian's notes. So if you could give a table included in your plan as to what you're doing. Julian's is a high level. It doesn't give us all of the details that we need for your plan.
Sure. First of all, I appreciate all those comments and agree with them. And we will put together a list of options for closing the gap. I will say that, and I don't say this to disagree in any way with anything that has been said in the comments, including Mark's comments about labor and unions. That said, to close, if we are facing a $10 million gap, I am glad to put options together, but I think we should all be clear-eyed about the fact that I don't think that gap can be closed without substantial hits to service, staffing, or employee wages or benefits. I don't believe that a gap of that size can be closed without that.
This is Bob White. Just to highlight what the mayor said, I have been sort of fixated on the comments you made some time ago that at some point we're going to have to face the broader question of the funding of cities like Hartford when you have a high concentration of need and a low concentration of wealth because of demographic patterns. There's an inherent tension, and there's only so much good management can do. So in coming up with options, I would encourage the board to encourage the city to start thinking outside the box. Other revenue sources, other than the state writing a bigger check, but other types of revenue sources that might be coming up, because I agree with the mayor. This is, it was a tough haul before this crisis, and I think we've just got to face up to what the mayor said, that this is a structural imbalance. That's all. So I appreciate it, Bob. And we will certainly take up the encouragement to include in that plan other ideas for revenue generation, and appreciate that.
This is Mark again. I'm not sure, and I agree with I'm not sure that the revenue enhancements are. Options that the mayor may choose, and I don't want to prolong a conversation as much as whatever options or revenue enhancement opportunities may exist for the city based on, as Bob said, the demographics and the uniqueness of Hartford, certainly may and probably will require some sort of legislative action. So if we are going to, as a board, examine possible revenue options that the mayor puts before us, there should be an asterisk, if you will, associated with ones that require some legislative action, whether it be in a regulatory fashion, whatever fashion is necessary in order for them to move forward with such enhancements. So within the box that exists today legislatively and demographically, unless there's a surprise out there or better minds are out there, and I'm sure the mayor has some on his staff, can create revenue enhancements or dollars on the rocks that haven't been turned over yet. But I'm fearful that the city may have, and we have seen as a body, the city turning over every rock without cutting into the marrow of the services, and to explore revenue enhancements is a wonderful thing that we all should continue to do. But I think we have to be realistic and say, without legislative changes, those revenue enhancements can't be done. by Hartford on its own. That's my own personal perception, and but I'll reserve my final judgment for the various options that the mayor can come up with regarding revenue enhancements, and see what can be done in the future.
Mark, Bob White,
This
that's
is,
exactly what I had in mind. That's exactly what I had in mind was that Hartford can't do it on its own, and there's going to have to be some legislative changes to allow them to perhaps tap other types of sources that are not currently permitted. So I agree.
And this is Christine Shaw. I just want to kind of echo the remarks that have been made. I recall a discussion, a very focused discussion with Mayor Bronin back in, I think, October or November, where we talked about these structural issues and the necessity for a broader conversation with the governor and the legislature about how its approach to addressing those structural challenges will be taken up. And that was before COVID. And I think what we've seen and what we have yet to see are the very significant issues we've kind of seen on the horizon. So you're not alone in that concern, Mark. And I absolutely feel like the conversation we knew was inevitable perhaps needs to be accelerated.
All right. I think this is a good opportunity, if nobody has any other further questions, to move on to agenda item number 5 and revenue and expenses. And let's talk about some of those initiatives that are already on the table. Mayor or Jalika, would you want to give us some highlights?
Sure. So I'll very briefly go through on the revenue side. Of course, the primary and really sole driver of revenue for us is local property tax, and we achieve that growth by promoting development. There are a number of projects that we have listed before that continue to move forward, although I think the effect of the coronavirus pandemic is unknown as of now. I do believe that we're going to be breaking ground on the Downtown North project very soon. I do believe we're going to be breaking ground on Park and Main very soon. I remain hopeful that the Parkville development will move forward. And although that is a longer term, and the Bushnell South development, which is also longer term, meaning probably over the period of 3 to 5 years. But those are very significant developments that are also very important. The other thing that we've talked about before, but that I just want to highlight, is that we continue to do a lot of work to recruit tenants to try to stabilize and ultimately raise the value of our commercial office buildings. And we continue to make some progress there. Just recently, although since it has been officially confirmed, and we're in a public setting, I will leave out the name, but a company recently decided to move 400 employees into the downtown. We had another lease signed yesterday for a significant amount of office space. So even in the midst of this, we are seeing deals that we had worked on come to fruition for commercial recruitment. There's also the risk on the other side that companies may begin rethinking how they staff or what kind of physical footprint they have. That is of concern. But so far, we've continued to see good progress and continue to be aggressive in our recruitments, which is really important for the commercial value. I think that's really all that I can highlight on the revenue side. Excuse me, on the property tax side and increasing revenue. And of course, the development comes not just with property tax, but also with permit fees. On the expense side, I think we've got a lot of work to do to figure out better options. Short of serious regionalization, and short of, as I mentioned earlier, decreasing staffing levels. I think that most of the things we've identified for exploration are pretty modest yield when it comes to generating real efficiency. I'm happy to talk about any of them, but I want to be direct about their what we see as their likely payoff.
Yeah, this Mark, I'm looking at the document that you've submitted, and I don't want to say nickels and dimes, but the effort is worthy, and the revenue enhancements are promising, but I'm not sure it gets us there. And you know better than anybody as to whether it will or won't. It certainly will mitigate, but will it allow for the structural change that will create the structural change, or is necessary to create a revenue flow for the future? I think, again, I just want to reiterate, with all this being done by you, and I commend you and your staff for doing it, a deeper discussion has to exist in order to realistically look for the future and the systemic changes for the stabilization of revenues for the future and expenditures necessary for the services is certainly forthcoming, and probably sooner than later.
This is Bob White. I agree again, Mark. And I think the comments about legislative changes may apply to the expenditure side as well. I don't know, I agree on the conversation about regionalization, but that's perhaps for another day, maybe sooner than everyone expects. But are there unfunded mandates that, if the legislature did what you hoped in your wildest dreams, that would provide some relief on the expense side?
I hesitate to describe it this way, but the largest unfunded mandate is in the form of the Municipal Employees Relations Act. I'm not advocating for dramatic change there, but that is the largest mandate, is that we don't necessarily have the ability to predict what the result of our bargaining will be, but that's the nature of bargaining. Beyond that, I would say I don't think that the mandates are the driver of cost for us. It's services that are the driver of cost. This I would not point in a mandate category, but there are a number of, we've talked a lot about non-taxable property in the city, but I just want to remind everybody that there's a ton of non-taxable property that is not covered under the pilot formula at all. And that includes large entities that are quasi-state entities, such as the Brainerd Airport, which occupies an enormous area of land and pays no taxes, and is also not under pilot, or MDC, which owns billions of dollars worth of property, but pays no taxes and no pilot, and is not subject to the state pilot. So I would consider those mandates of a kind. We don't have the ability to say no to having that airport, or to say no to having that regional quasi-state entity. Same goes for Mira, the trash burning power plant, although they now pay a modest pilot. So those are mandates of a kind, in my view. The other point is the non-taxability of all nonprofit property, period. And we have not just many nonprofits, which we welcome, but many nonprofits which essentially perform state functions. They are contractors of the state. They're funded through the state, but because they are not the state, they're not subject to pilot, and they also pay no taxes. So that, to me, would be the most significant burden that I would describe as a mandate.
That's helpful.
I agree. It is helpful. Mayor, in looking at the efficiencies, I know that these efficiencies were brought up on a one-year basis. As we start to move forward and looking out the out years, this was originally built, I think, for the prior gap to the prior plan. And now when your plan is showing almost the $5 million, not without any additional contingencies that could happen with the COVID, as you had mentioned, that this plan ranges, if I just quickly add up the dollars that are through here, somewhere between 1.4 and 2.8 million, which wouldn't close the gap of the 5 million. So I just wanted to bring that to your attention. And I know it's soft, but and I know that you're trying to do your best with the constraints that you're under, but and I don't know where those heavy lifts are, as if it is mandates or not mandates, but I just want to bring to your attention that even if everything here came through and it came through at the highest range, it will not cover your gap.
Oh, that's precisely why I made my comments earlier
Sure.
about the inability to close that gap without fundamentally reducing services and staff.
Mm-hmm.
I couldn't agree more. Now look, I will say that prior to the pandemic, a big part of the strategy was that the growth that we've been working so hard to achieve helps to produce not just the incremental property tax gains from new projects, but also a rising sense of momentum and optimism and energy that lifts values significantly.
Right.
And I do think that we actually were experiencing some of that momentum and energy, and I'm certainly hopeful that we can recapture it. The ability to recapture it, I think, will depend in part on our ability to maintain joint efforts like the CRDA-driven economic development efforts. Those are absolutely vital. But if those do continue, I do believe that notwithstanding this dip and this crisis, that we can recapture some of that energy, and that we might even have an opportunity as people in places like New York and Boston rethink their priorities and rethink what kind of place they want to be living in. And I am hopeful that we can seize that opportunity, and I really do think that could produce growth that lifts up the grand list in a very significant way. But I'm also fearful that because of the state's challenges, we're going to take the foot off the gas of CRDA's led initiatives and lose that chance.
Understand. Any other comments? Okay, I'm going to move on to the next agenda item, which is number 6, which is the corrective action plan. And as it was noted prior in the minutes, we just wanted to hear some updates on where you stand with the corrective action plan that the auditors had provided. And if you could just give us a verbal update, that would be helpful.
Cam, it's Lien. I can speak to the IT comment.
Perfect.
I spoke with the IT director yesterday, and in regards to the first comment about laptops, they tried to apply an encryption to the older laptops, but that encryption failed due to the age of those devices. So obviously with the COVID situation, the city has moved to a remote environment, and a good chunk of the laptops have been replaced, and the city issued many new laptops to staff. And all of those new laptops were outfitted with encryption, so they are much more secure now. And as we get through this COVID environment, there will be a refresh to the older laptops to replace them with new laptops that are more secure.
Okay. As you move forward on that item, and we're going to put it as a reoccurring item in all of the upcoming subcommittees, then I would ask on that particular item if the inventory comes forth, and just let us know what are the number of laptops that you have at risk, and then what that plan is and how long will it take before they're off the cycle. in the refreshes.
Gotcha. I will do that for you.
Thank you.
Absolutely.
Then it lets us know when this audit finding will be closed.
Perfect.
Anticipated.
The only other update I have for you on the IT comment is, I'm sorry, let me just pull it up real quick, is the information systems policies and procedures. The IT department is still working with the security vendor. This project has not been completed yet. She's not quite sure when the project will reach its completion, just because right now she's short-staffed and everybody is stretched thin with COVID and supporting the remote environment. But she does have it as a priority project to finish completion as soon as things let up a bit.
I understand. Is that policies, procedures? I'm just double checking. Is that taking into okay, no, there's one more item under the policy, under the IT, which is the disaster recovery.
Correct. That I did not get an update on yet.
Okay. Can you do so and then just submit that separately and at least be prepared to speak about it at the next subcommittee?
You got it.
And one other finding that needs to be talked about is if the Board of Ed can talk about the Board of Ed financial closing process. Is that possible?
Sure.
Or
The
This is
CFO
Clarence.
is on the line.
Hi, this is Clarence Zachary, Chief Operating and Financial Officer of the Board of Ed. Before I talk about the board,
Hi,
I want to add one thing about the IT controls. Part of MHS's duties right now, they've helped us roll out distributing almost at this point 7,000 laptops to our students. So they've been sort of preoccupied with doing some work for us. So any delays they've had, they've been sort of juggling us getting all our students in distance learning also. So they've had their hands full, so to speak.
Totally understand.
All right, on the Board of Ed, I just background. I joined the district back in January, so this finding is new to me, but I concur with the findings. There aren't a lot of documented procedures. There's a lot of institutional knowledge in the prime assets heads, but nothing written down. What I've discovered in my few months here, we have a prime example. We have a gentleman who officially retired in December. We looked for a replacement. We had a hiring freeze. Then COVID came, so he's been working part-time, but all his data is in his mind. He's been with the board and the city 15 plus years. So it's alarming to me that, we don't have those sort of what his process procedures is documented. So that's one of my goals is to once we get through this sort of COVID crisis, is sort of document our procedures so we have some redundancy. So if one person's sick, ill, gets married, whatever the case may be, we can still perform our essential duties. So the finding I will say I concur with. We understand it needs to be corrected, and we're trying to develop a plan on how to get it addressed going forward.
Very good. Glad you understand the importance of this.
No, I just tell you, just for me, even me transitioning position, there's no sort of guidelines for me. It was sort of like hit the ground running. There's no sort of a template to follow. Every district's different, but you generally have some sort of layout of how things are done. That wasn't here, so we're gonna have to try to develop that. So whenever I leave the position, I turn it over to someone. There's a playbook, so to speak.
I understand. So as a little bit of feedback, I had the same thing happen to me in my career and went in and in order to get rid of the audit finding, I had to do a phased-in approach. We're actually doing that with one of our municipalities. I gave them some guidance in that area because when you're talking about policies and procedures and you don't even have a manual, it can be very daunting. So the best way to tackle that would be to take it as a project, and it might be a multi-year project. And what are you going to accomplish each one of the years? And then the auditors will appreciate the fact that you built a plan as such.
Yeah, that was sort of my thought process, just given we've had so many staff reductions, just the manpower or people power, we don't have enough to get it done quickly, so we're going to have to phase it in just because we have to keep doing our regular work and do this at the same time. So that was what I considered doing, phasing in over multiple fiscal years until we get, we've got budget, we've got finance, we've got risk management, all need to have some documented procedures.
Sounds good.
Thank you.
Any questions from the board members on corrective action plan?
This is Mark. In West Haven, we had refresh my memory as to the audit procedure of West Haven. We had them do the city side, then we had them do the board side. When I say we, MARB, I guess, directed or paid for the audit being done by both sides of the equation, which not unfortunately, but which uncovered some issues that need to be addressed there. Have we done the same thing for Hartford, or is it necessary to do that for Hartford? Can you maybe help me with that?
Of course. What happened with West Haven was the auditors have their template and they go in and they audit based on a scope document. Now, they don't do a forensic. None of this is forensic. Even what we did with West Haven, it wasn't forensic. So they have a set of criteria when they go in and they test. They never test 100% of everything. They'll do a materiality scope, for instance, and do a 20% coverage. So 20% coverage, it still leaves 80% uncovered. But what happened in West Haven was within the coverage that they did, their outcomes were very alarming, which then meant they were going to have to restate prior year. Under that scenario, and knowing based on that 20% coverage that they did, we had then decided that we wanted them to do a deeper dive so that the coverage could be, we would have more coverage and mitigate the risk that we wouldn't have to restate again. It would be something that wouldn't be as material as what happened this year.
So have we done, go ahead, I'm sorry.
That doesn't have to be done in this scenario because we have not, there are no audit findings that for any material findings were found by Bloom Shapiro on the city side or at the Board of Ed side. These findings that they have are management letter comments, which then don't rise to materiality or significant deficiencies, where in West Haven, those all rose to the level of significant deficiencies and material weaknesses. Two different levels of findings.
Very good. Thank you.
Okay. Any other questions? Under the other related business, I just wanted to ask, and I'm not sure if the superintendent is on the line or not, I wanted to see if we had an update on the Board of Ed RFP special education, that RFP that was going out, and if it did go out or if it get delayed because of the COVID. If the superintendent isn't on the line, do you happen to know, Clarence?
I don't think the superintendent's on the line, but I think it got delayed by COVID. We are doing we've started our own internal assessment, which I know is going on. I think they're trying to they get the RFP ready, given that everything sort of shut down the last 2 months, but I know it's still on the agenda because, as you all know, our SPED budget is an impact value driver for our overall budget, so it definitely is still on the horizon for us to do.
Very good. Do you happen to know also about the Board of Ed budget and their cycle?
I don't understand your question when you say their cycle.
Has that process started? Like, we don't have the details of the.
Oh yes, yeah. We're actually towards the end of it. We were trying to get something out to the city finalized, but we decided we had to add some more. We had cut some positions we had to add back for compliance issues, so we didn't. We want to make sure we're focused on our kids. So I suspect that will be to the city within the next few days, so that way you all have the information shortly thereafter.
All right. Does anybody have any other related business that they want to speak about? Then, if not, can I get a motion to adjourn? And mention your name.
Christine
Mark,
Shaw,
so
so
moved.
moved.
Mark, second.
Thank you, Chris. Thank you, Mark. All right. I'm sure everybody is in favor. Thank you, everyone. This meeting is ended, and appreciate it, and stay healthy and stay safe.
Thank you.
Thank you. Bye-bye.
Thank you.
Thank
Bye.
you. Thank you.
Take care.
Hang in there.
You too.